So we are back in the black in 2025 for now, as May was the strongest month we've seen in the S&P 500 in the last 18 months. So the S&P was up 6.2%, the Dow was up 3.9%, NASDAQ up 9.5%. Stocks were boosted by a little bit of progress towards striking some tariff deals, but more so a really strong earnings season. So S&P 500 earnings as a whole hit a new all-time high. Growth forecasts are continuing to be positive. Specifically, double-digit growth for 2026 and 27 is still what analysts are predicting. That's awesome. So as a whole, it was an 11% year-over-year growth figure for the S&P. Best quarter in over 3 years. 9 out of 11 sectors reported positive earnings growth. Over 80% of S&P 500 companies exceeded their expectations. So that's exactly the kind of report you want to see. Let's zoom in on the Magnificent Seven. We have to touch on them. Expectations are always really high for these stocks. That's why their multiples are a little bit higher, but they came through. So a combined 35% growth rate in their earnings in less than 2 months. NVIDIA, which had really fallen from grace earlier this year, climbed from $94 a share all the way back near its all-time high to $137 per share. So what a ride that stock has had over the last few years. And another trend that has come out is that more and more companies are providing less guidance. And the level of uncertainty that's out there right now means that the range of possible outcomes is just really wide. If we had to guess, I'd say that the market will continue to be volatile here while these tariff discussions are still happening. But we don't make predictions about the short term, and I want to show you why. So I'm going to pull up a slide here, and this slide is going back the last 5 full calendar years, and it shows, hey, where have analysts across the industry predicted the S&P 500 performance? This is their price performance, not earnings, their actual market performance to be. I don't know why they make these calls. They go out and publicize it. But what we're looking at here, the blue square kind of in the middle, that's going to be the average, or kind of the median estimate among the group. The light blue circle is the high-end estimate. The orange circle is the low-end estimate. The green circle, that's what the S&P actually did. So what do you notice here? They're 0 for 5 on even getting the performance within the range of predicted outcomes. Again, I don't know why they even do this. This is why we don't. The idea that we can do this, knowing that the best and brightest out there whose full-time jobs are to estimate and predict what the market's going to do, it's just not an easy thing. So we understand that these tariff discussions are causing massive disruption in the world. And for many of you, directly to your company, directly to your job, the biggest challenges that are being faced in the world are staring you right in the face. You're concerned. How could you not be? Totally get it. But we are here to remind you that there is a broader picture out there. There are more positives out there than what you might realize in your day-to-day life. The market tends to recover in anticipation of the economy fixing itself, not after the fact. A great investor, Sir John Templeton, once said that the four most dangerous words of investing are, "This time is different." So yes, we're back in the black here in 2025. It is not a time for a victory lap, because the market could easily turn on us again if some of these tariff talks go south or continue to, flounder, be up and down, whatever you want to say. We can't predict the short term, but fundamentally, earnings are solid. That should always be the #1 factor. Thanks so much for hanging in there with us. Please don't hesitate to reach out with any thoughts or questions. Thank you.